Welcome back to Alberta Primetime and our nightly vocal point now. The price of gold hit a record high today. Is it too late to invest? We'll ask our Monday Money panel. Russ Dratwa is an investment advisor with Canaccord Wealth Management. Jim Yee is a financial education expert and founder of retirehappy.ca. And Shafik Hirani is director and senior executive financial advisor with Investors Group Calgary. Good evening, gentlemen. Welcome back to Alberta Primetime.
Thanks, Jennifer. Thank
you. Well, gold spiked to a new all-time high today, more than $1,600 an ounce in trading today. Some analysts say it could hit $5,000. Let's start with that prediction. Russ, do you believe it?
Well, I'm sure people in the 30s when gold was at $34 never thought it'd see these amounts. But anything that does happen from here, long-term, fundamentals have to kick in. You're going to get the spikes. And that's the question. When was it? Back in the 80s, I believe it hit $2,400 for a cup of coffee in today's dollars, settle in around 1900. So anything's possible, but at some point fundamentals will have to kick in to sustain an exorbitant number like that.
Let's talk about those fundamentals. Debt in the U.S. is driving the commodity up. It's, I suppose, regarded as a safe haven for investors. Is that the big thing that's fueling the spike, Jim?
I think a lot of it is speculation, whatever the speculation is. I think that gold has changed as a commodity. There was a day when you bought gold just because it was truly a safe haven. You bought actually gold bars and you stuck them in your basement safe. And nowadays there's a million ways to buy gold. And the more ways, the more opportunities there are, the more emotional it's become. And so it's become a true commodity. And every commodity is going to have its spikes and its lows. And
so what is fueling this spike, though? And it's been a couple of years that gold has been on the rise. Shafik, what's behind it? Can you explain that for us?
Yeah, and gold is considered a de facto currency. If you look at sort of a benchmark that all currencies place themselves against, it's either the U.S. dollar generally, the greenback, or gold. Well, the U.S. is, in Europe there's austerity measures. In the United States they're looking, August 2nd is that deadline for the, do they raise the debt ceiling at that $14.3 trillion debt ceiling that Obama's having a very challenging time. Emerging market inflation, all that stuff leads to higher gold prices because gold is considered, like Jim said, you know, speculation, but it's also considered a hedge against falling currency. So that's what's driving the short-term raise, at least.
And what do you think? $5,000 an ounce?
Well, Jen, you and I have talked about this a lot, and $5,000 an ounce is good to just pull out of a hat. I don't know where you come up with these round numbers, but I mean, when? I mean, if we're talking about another decade, yeah, then that's 15% return on investments. But if we're talking about the next couple years, you got to put into consideration the environment in which we live in, and we're going through so much that right now is the time where everybody's going to say it's going to hit 5,000, it's going to hit 6,000. I think it's bubblish, and I think everything will revert to the mean. Gold doesn't do anything, doesn't pay a dividend, it's just a rock. So I would expect a downturn in the next 6 months to 1 year, in my opinion.
It's sort of funny when you see the number of analysts that are jumping on the $5,000 an ounce bandwagon. The first people to say it were sort of considered to be a bit wacko, but it's starting to gain steam. 9 months ago, gold was down to $1,300, and if you thought it's too late now, you were wrong. You would have made 23% today. Is it too late then? How do we know, Russ?
The key is where does it fall into your big picture? I mean, if you're going to buy gold as a safety net because the whole financial world has come to an end, then buy yourself a farm, make sure you got fresh water, and grow your own food, because that was the premise of that 5,000 gold in the short term, because the financial world's going to come to an end.
Right.
I mean, that's the premise in the short term. But as you so well said, I mean, if you're looking at it, how many years down the road, definitely feasible, because it was $34 in the 30s. So,
so your advice would be, sure, go in if you maybe if you've got the money and you can tolerate some risk.
It should be in everybody's portfolio, I would think, in this environment. But again, if you're going to, one of my clients said, well, I'm just going to put some cash in the safe. I said, well, if you can do that, just buy some gold. So if there's a fire, then at least it's protected. I mean, that's the whole point of gold. It protects.
You talked a little bit about 30 years ago. You bought a bar and you put it in a safe. That's old school. How do you go about it now? Just get on Google, or do you need to talk to an advisor?
Yeah, there's many ways to buy into gold. You can still buy the bars. You can go into, money shops and buy bars of gold, jewelry, that kind of thing.
Because that's fun.
Sure, but now you can now you can buy fun for some people, yeah, for my wife. But I think that you can buy them through ETFs, you can buy stocks, you can buy gold stocks. There's many ways to invest in the gold market.
Does it make a difference how?
Well,
not really. You're still buying.
I think it's
commodity?
just how you. I think there's different strokes for different folks, and it's how you want to access it. I think the bottom line is you have to build a plan first. I always talk about building an investment plan and what component is going to go to gold. And if it's 5, 10%, you have to stay true to that. And if your gold holdings, which is now 23% higher from 9 months ago, the smart strategy is actually to profit take and rebalance the portfolio, as opposed to this whole idea of should I buy gold, should I buy natural gas, should I buy some real estate, should I, that kind of investing is
Take your money
unstructured.
off the table
I call it the
while
wing
you
it
can.
strategy.
Right.
The wing it strategy has proven over and over again to mislead people into the wrong behavior.
So take the money off the table while you can.
I believe it, if you rebalance it, yeah.
Shafik, you heard Russ say everybody should have a little gold in their portfolio. How much? How do we decide that? Is it a risk tolerance issue?
Yeah, totally. We all have the same propensity for return. Everybody wants a better return, but different people have different propensities for risk. And the nice thing about gold is it is negatively correlated against other investments like banking, like U.S. currencies, which means gold will go up and those will go down. So there's a rule of thumb which is around 10%, but if you feel like taking a little bit more risk, go to 15 to 20%. Jennifer, you did ask a question about how you buy it. I would tend to lean people towards more actively managed pools than the actual gold bars themselves, because the pools, the companies, first of all, have underperformed the commodity itself, which means there is a lag, which means you're going to get a higher return out of some of the pooled funds and some do actually pay out a dividend, whereas a gold bar doesn't pay you anything.
Good point.
So.
Russ, are there other good investments that people are overlooking because they're caught up in the headlines of gold? I mean, is it cadmium? There's other metals out there if you're particularly interested in those, or just other stocks, commodities?
Absolutely. The latest craze is rare earths in my industry. And all I tell my clients is if we cannot put a value on it in this environment, I don't want to touch it. And that goes for gold as well. If I can't come up with a value, and I don't know how I possibly could, truly, I look at a company, I say, what are their assets? And I try and put it into English that I understand, I can relate to a client. That's the investment. If you're going, as Jim so well said, if you can't fundamentally value that, then you're speculating. And as Jim said, you don't want to go beyond 5 or 10%.
All right. Well, thanks for your insight. We've got more to come. Next on the Monday Money panel, a U.S. network pokes fun at an Alberta energy company. In fact, they accuse it of using a cartoon mascot to convince kids a controversial technology is okay. Why the Frackosaurus is suddenly disappearing when we return. Welcome back to Alberta Primetime and the Monday Money panel. Calgary-based Talisman Energy has pulled its Frackosaurus character from company PR material after U.S. television satirist John Colbert mocked the mascot that promotes fracking. That's busting of rock formations to get at previously inaccessible natural gas. Shafik, you're a dad now. We can't show Talisman Terry, the now extinct Frackosaurus, because it's copyright and they've pulled it. Was it really inappropriate of the Alberta energy firm?
Well, there's other companies like Chesapeake Energy that's got something similar. You got to feel bad for Talisman here a little bit, because Stephen Colbert, first of all, he can cut into you pretty bad, and that's, and they picked a dinosaur of all ironic things. I mean, if they had picked a puppy dog, nobody picks on puppy dogs, so I don't think they would have been pulled. But is it unethical or is it bad? No, I think they're trying to educate people, but it's a little bit perceived as propagandist, of their own self-interest. So.
Right, because you have people protesting fracking as an extraction process. Jim, Talisman Terry was in a coloring book and it presented a simplified version of the extraction process. Does public pressure, I mean, aside from Stephen Colbert, does public pressure that the oil sands and its companies are facing, does that now threaten the natural gas industry? Is this going to be something else for their bottom line?
Well, I think it's huge. I think it's been part of the oil sands, part of the natural gas industry. Like you look at the Mackenzie pipeline, originally started in the year 2000. The discussion is still happening largely because of legal, environmental, lobby groups. So yeah, absolutely, it plays a huge role. I mean, look at the oil sands is very controversial because of the environmentalists. So,
is it on companies' radar that you deal with, natural gas companies?
Oh, absolutely. It's a core. Most people equate Alberta to oil. It's natural gas.
But the public pressure and the opposition to fracking as environmentally damaging.
It is huge. There's actually some investments that are in France. There's a huge natural gas basin out there that they are putting all these projects on hold. It has a huge impact on the investment world right now, absolutely.
For 40 years, companies have been trying to develop the Mackenzie Delta as well, the huge gas deposit there on the north coast, Northwest Territories, up in the Arctic. And it would potentially have a pipeline running into Alberta. But it's been 40 years, and now one company's had enough. Shell pulling out $16.2 billion stake up for sale. Poof, a lot of Calgary bankers surprised. Russ, what does this mean for the industry, if anything?
I've made a few calls on it because you would think it has some impact, and everybody to a T said it's going to have more impact in the Northwest Territories, Aboriginal groups. Alberta and BC are going closer to home. There's some great projects, the Montney, in the northwest, northeast BC, that are so much closer to home, closer to infrastructure. The costs aren't going to be the $16 billion. And these companies have till 2013 to decide if this pipeline is a go. So,
if anything, it's more of the same, isn't it? Oh, yeah, that's on hold.
Absolutely.
Shafik, Imperial Oil is still committed. ConocoPhillips, another big player, they're still in as far as we know. But there is speculation that even if Shell can sell its stake, which might be tough, the pipeline to Alberta will not happen. Is that a concern?
Yeah. You know, it is. And I just want to make a quick correction to you, Jennifer. It's not a $16 billion interest that Shell has. The entire project itself is coming in at a budgeting price of around $16 billion. So Shell owns about, I think, 10 or 11.5% of it. So their working capital interest is about $1.8 billion. So the question is, first of all, they just received approval over, I think it was Jim that said, over a 10-year period that they're going to go ahead. The question is, who's going to buy this? Mm-hmm. And Shell's 10% interest. The natives own 30%. Esso owns a working interest as well.
So, Jim, that's the big question. Who is going to buy it? Do we look at natural gas prices around the world to see it? Who's coming
For sure.
forward?
I think we've become a global industry. And I think that this project, we'd be short-sighted to think that it's an Alberta project. I think that nowadays you have a mass number of Asian buyers coming in and looking at all commodities, oil, gas, and being huge buyers of it, whether they're from China or Korea.
Natural gas actually worth about 4 times more in Asia than here.
Yeah, and that's an interesting point, because here in Canada it's about $3 to $4. In Europe it's $8 to $9, and in China it's 12 to 14.
Thank you, gentlemen. Russ Stratt was an investment advisor with Canaccord Wealth Management. Jim Yee, financial education expert and founder of retirehappy.ca. Shafik Hirani, a director and senior executive financial advisor with Investors Group. Great to have you all.